There I am.
What's up, man?
What's going on, dude?
He is in the house. My boy. Hanging in there. Oop, let me get I had a little double stream there for a second. Morning, dude. How's your morning so far?
Oh, going great.
Killing it. All kinds
We
of
did
crazy.
9 trades this morning.
Dude, it was actually a pretty good morning for sure.
For a Monday, not bad.
I know, right? To see some flipping short and then probably gonna flip long here in a second.
Yeah.
At least looking at it. Nice little basing out. Big old gap this morning. So we'll give the guys a couple minutes to hop in. Just checking this out. What's up, Tommy? Orca's in. Yeah, dude. I love that thumbnail, dude. I sent it to somebody. I was laughing and it was like, it would be funny if that totally looks like you. And I was like, you know what, dude? That actually is me underneath all that. I have no idea how he did that. Morning, Tommy. You guys, if you can, maybe Jesse too. I was gonna tag you in that, but if you guys can like retweet it, send it out. Just get a couple people in here, get some likes set up. Give them a couple minutes to get started. You can take a look at some other things, but dude, I'm kind of feeling this week. Believe it or not, I'm kind of feeling long NASDAQ and short Dow, short industrials. That was kind of what I was looking at so far, but we got a ton of stuff to go over for sure. And again, get some likes in, get this shared out, and we will get started here in just a couple seconds, man. Do you have anything on the watch list, Jesse, that you want to set up?
I'm taking a look at Tesla for possibly a swing long.
Oh yeah, that was a big old bounce. That was probably the best looking chart out of the gate this morning.
Yeah, I'm looking at Tesla heavy. I did exit NVIDIA and Disney swings on Wednesday before Thursday. Just didn't want to hold them much longer.
Ooh, I didn't even check NVIDIA.
Yeah, I got a little over 100% on NVIDIA.
Nice.
In a couple days, so it worked out pretty well.
Yeah, you had the
spreads have been
long
well.
swing debit spread. Oh, that chart. Yeah, right off that Goder week. Ooh, I have something triggering. I have no idea what it is, but okay. All right. Well, let's go ahead and get started, man. So welcome anybody. If you're new to this, I know we have a couple servers kind of hopping in, a couple new people on Twitter. So appreciate that. Appreciate the shout out for sure. Every Monday, the crew and I we have a handful of traders, probably, in the server, maybe 15, 20 traders, something like that, that are all like professional traders, and we trade for a living. So we'll send this out. Jesse's one of the favorites for sure. Holy crap. I see some of my options positions like making some major moves right now. Oh, it looks like short.
Holy moly.
Yeah, that's a big old move. Do we miss a news event or something?
12 o'clock.
Just dropped hard. Yeah, man, we're seeing that. Lincoln, what was did we miss a news?
People talking.
Yeah, look at the VIX 22. We are live. Dixie popping.
Yeah, Bullard talking.
Oh, that's right. So that's right. We had a Bullard speech this morning. Man, I should have. I'm glad I was mostly out of here, but yeah, that was. He loves to do that, man. I don't know what his deal is. Yeah, 10 a.m. my time. Oh, it's in an hour. So he talks in an hour.
No, it's 12 p.m. Eastern.
Yeah. He loves to dink around with the market, that's for sure. So, oh well. We'll see how that goes. Bullard the bear, yeah, for sure. Right? Definitely Fed talk. Yeah, Fed speakers. Actually, you guys, Fed speakers all day. You guys are all over it. And watch this bounce. I'm sure of it. But Fed speakers, not even all day, like literally all week, but it's gonna come to like culmination right on Wednesday with Papa Powell coming in hot for sure. But good thing is my feeling, man, and I don't know how you're feeling about this. I'm feeling like we're real close to peak Powell. Like real close to peak Powell. So without further ado, let's kind of get into it. So we're going to talk about some options today. We might come in, might find a couple setups. I got my Thinkorswim up. We may take a look at like what's going on in the actual option chains, maybe pick out a couple actual trades for you guys. We'll see. But I do, before we get started, need to point out, totally consider whether options are even suitable for you, right? Before you start trading, call 188 options and get a copy of characteristics and risks of standardized options before you start trading. And I think that's it. Yeah. I'm supposed to read this other piece, knowledge of financial resources, blah, 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 blah. Yeah, market data recommendations are subject to change at any time. So I'm going to hit it off with a couple little things here. So from a recap perspective on the headlines, look at that bounce. Did I not just call that?
Yeah, I'm
All the way
looking to
back
go
and then
long here.
some? That is hilarious. Oh my goodness. Oh my goodness. Hilarious. So, you know what? Truth be told, I really don't think we're going to make any big, massive moves until we get to Wednesday. But
yeah,
until then, just kind of looking out. There are a couple of things going on this week. And I think for me, having some of my positions in some of the oil stocks, things like that, I did want to point out. So what's going on with crude right now? I think that's a pretty big deal. In general, that's going to be good for certain sectors, like crude going down. So if you guys remember, the inflation trade was, being long oil services, all that kind of stuff. And I think we're probably near peak inflation, which is why I say we might be near peak Powell. Total speculation, but you never know. But there's a couple of things going on with OPEC right now, and I don't think that crude's going to be taking like any massive reversals anytime soon. We might get some oversold pops, which looks like what we're getting this morning. Let's say oversold. It's love that term. My guys know I hate it. But it's you might get some bear market rallies. How's that? But in the interim, there's a couple things. Over the weekend, this China zero tolerance for zero COVID restrictions, that was a big deal. So China, if you guys don't know, is the world's largest consumer of oil. And so if they're shutting down China, well, guess what? Consumption of oil is going to go down, and supply demand, blah, 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 blah. You might see a little lower oil prices in the interim. Also, we're coming into some new restrictions. OPEC did have a discussion about opening up more output before some of the Russian oil restrictions actually kick off. And then the U.S. at the same time, since we got, Biden doing his thing, easing some of the sanctions. So Chevron is starting to, increase their oil outputs, and I know they have a lot of pressure too on just trying to get the gas prices down at the pump to the consumers themselves. That said, interesting dynamic. If you guys remember, Biden also basically depleted the SPR, or the Strategic Petroleum Reserves, and I couldn't find this. Actually, I don't even look, but there was actually, I remember hearing this. He was looking to fill it around $65 a barrel. So for me, $65 a barrel in my head, that's where the U.S. is going to come in and start refilling some of the petroleum reserves. And I'm going to take a look at this chart here. Yeah, we could get a nice little flusher to right around that level. Oh, here we go. And so here's this level right here, 68 that I'm looking at. Oh, no, Jesse, if you pay a whole lot of attention to crude, I believe you do. I obviously
just
do.
intraday trade it.
So intraday. So I'm looking, when I go through some of this stuff here, a lot of times I'm thinking like positional things for like my equity portfolio, things like that. So I still like crude. I still like oil services. But that said, I don't know that they're, going to be taking off anytime soon. And they could be in for a little bit of a pullback, which would be fine. And when crude does hit the 60, call it 68 level right here, I'm just going to set my alert right there. Cool. I'm going to be looking for an entry in some of my favorite OAH, things like that. But I think until then, we're clearly going down. We definitely broke this low here. This is CL crude futures on the daily chart. So yeah, nice little hammer. We could have a little pop. I might be looking to trim some exposure right around 80 if we even get there. That's a little fair value gap. Call it. We just had one fill right around here earlier. So, you know, we could see some bounces if we do get to this 80, 85 level. I'm definitely going to be trimming some exposure. But until then, I think it's choppy to the downside. That's just my gut. Call it what you will. So that said, that's mostly on my radar. I'm going to be watching that level, see what we can pick off. Might be a good place for some Exxon. You know, the oil companies, the oil stocks like CVX, Exxon, you know, they're going to be profitable regardless with, you know, $40 a barrel gallon, like $40 a barrel oil. So, I mean, CVX, the increasing production, that's more revenue, that's more profit at the end of the day. So we'll see. Look at this. Man, what a choppy market, dude. I'm just taking a look at the SPY. So flush, bounce all the way back and then some, and then right back to where it came from. You know what? That's pretty much what I expect for Monday, Tuesday. So moral of that story, I'm thinking very short dated stuff for the first half of the week. Lightening up on Wednesday. We got a big day on Wednesday and Thursday and Friday. Actually, for a holiday week, man, we are loaded with economic data for sure. I mean, super loaded. If you guys have any earnings stuff that you want to watch also, Polar the Bear, yeah, let me know and we can take a look at that as well. On a positive note, Black Friday sales were like well above expectations for sure. So some of that retail trade still playing out. I have not checked Amazon today. I did look at it for just a little bit. My gut is that they're doing okay, although we kind of gapped down this morning. Yeah, ooh.
212 up on the hourly.
Yeah, I'm just seeing that inside right now. But yeah, that I like that bounce right off 92.30. That's a beautiful bounce. You guys can see what I'm looking at. Just you know, higher high. This is the low, and this is the higher low right here. And so we made a higher low just now. So if I was gonna take a shot, I did buy a little Amazon equity this morning. Not gonna lie. But you know, it's a good place for a shot in my mind. Nice little potential reversal setup here for sure. Really needs to break over 104, but you know, between now and then, could probably trade that range fairly easily. I had another Black Friday trade on Macy's. Yeah, this guy's running. It was like $20, give or take. Doing all right. Little toppy here. We got a dividend payout the 14th. So probably hold it to like the 12th. Something like that. And then exit stage left before anybody gets rugged. But we'll see. See how far it goes. You got any trade setups that you're in right now, Jesse?
I'm still in FedEx. Other than that, I'm flat.
Yes, it is. In FedEx?
FedEx, yep.
I do like that. So FedEx and UPS. I was looking at UPS. FedEx, man, you got a big old gap to fill there.
Yeah, I'm pretty much risk free.
Yeah,
that one's hit well over 100%.
Yeah, I remember you taking that right around that 160 break for sure. UPS was a much better setup more recently. Had a nice little gap, but it's currently fading. I like this 178 level if we can get near it. Not bad today. So the shipping companies, here's the logic, right? So you come in a holiday season, what do we start doing? We start sending packages out. So it's a good season for them. I personally kind of like this UPS chart a little bit better. Yeah, earnings fine. FedEx has a long way to go. This is kind of like, I feel like this is looking at like Walmart, which the chart is a little bit better versus like Target. You know, a lot of room to go if we're gonna get bouncy for sure. But Target, I don't know. I feel like this last earnings report, Target might have something Target specific going on. I'm not really liking. But here's this level on target, 167.20. So every time we get up to that level, it's either going to be resistance, 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 and then breakout, breakout, breakout. So we got 1, 2, 3 tries. 1, 2, 3. No such thing as a triple top, right? It's not really a top. But usually on the 4th try, oh, dude, I kind of like this here now. Well, I might take a look at that for sure. So I'm gonna put that on the radar for sure. Question: What's the best way to rank trade alerts from all the channels available on the server? I'm seeing so many, not sure to follow. Feels a bit overwhelming. Yeah, totally can be overwhelming. Yeah, Adam will help us out. That is Benny. He's on the support team. And yeah, if you guys ping something like that, typically, as you go forward in the servers, you'll see different people have different styles. Like I have a swing trade channel. Jesse does some swings, some spreads, also futures. Ace and Bryce, very early traders. So if you're trading quickly in the morning, they're great guys to follow, very fast. So if you have small little bit of time, in and out. Didi, our boy. I don't know where Didi is. Maybe one day we'll get him on here. I have yet to ever see Didi on video. So, but he has been on some audio with us for sure. Didi is a great swing trader. He's good small account guy. For me personally, look, I send more trades than anybody else that I've ever seen, aside from my buddy X, who probably the only other one that I know that trades like near the same volume as I do, or at least quantity. But what I could say is, like if you miss one from me, don't worry. There's always another one coming. And yeah, I think, the rest of the guys, we have Duke. If Duke's in your server, he's a great swing trader. Typically take a look at that channel towards the close. So any swing trading channels, take a look at that towards the close. It depends on your schedule, really. So if you're working a full-time job and you're able to check in just before the close, take a look at the swing channels. So that's myself, Swings, and Duke. Yeah, Duke is a beast for sure. And we'll usually have something waiting there for you towards the end of the day. If it's, you got a couple minutes, take a look at my channel, take a look at Jesse's channel. We're more or less intraday most of the days. And if you only got a couple minutes in the morning, Bryce and Ace, man, or an hour, those are the guys. But if you're in early and you got to go to a meeting, something like that, what I would say is plan your trading time, right? Plan it so that it starts here and it ends. So when your trading time ends, close the trade and move on to the next one. Do what you got to do. It's not worth the stress. And of course, we have a ton of watch lists for sure. So, all right, let me get over to the rest of this stuff here. Where were we? That's most of that stuff. I did want to say one thing. So the Fed Watch tool, if you guys aren't familiar with the CBOE Fed Watch tool, this is something that we look at as traders all the time. I noticed something major different this morning. So last week we got the Fed minutes, right? And what the biggest thing in that piece was, really, it was just, the talk is that we are actually right here looking to slow the pace of the rate hikes. Nothing that we didn't know, but we should be pricing in about 50 basis points for next FOMC, which is in December 14th, right? We also get PCI, sorry, on the 13th, the day literally right before. And this week we get PCE, which is actually a major, major number. So Wednesday we had Papa Powell, and Thursday we get PCE, and Friday we have non-farm payrolls. So it's like boom, boom, boom. 3 days in a row of some massive, expect very whipsaw type action. Cool. So that said, let's take a look at this. What's interesting here is that the dark blue lines, that's where we are today. The darker that we are, the further into the current that we get. And for a while, we were actually pricing in, like this was an 85 something percent probability of a 50 basis point hike in December, as I remember it. Yeah. And right now we're sitting at a 72 and a 27% probability. Is it 25 basis points for December? Nothing at 75 basis points. So there's a little hopium going on, which is why I'm somewhat bullish on the market overall. But I do expect to see a lot of that kind of chop that we just saw. Look at that. Flush, bounce, and then some. Flushed it right back again. And guess where we are? We are right back where we started. Hilarious. And crude going up. Too funny. Too funny. The Dixie too. We'll get into the charts here in just a second. All right, so this is where we are. So we do have Santa Claus rally. So we're still in it. This is what I want to take a look at. So we're just coming into the end of November, and then we'll typically have a little stall out. And this is actually, all this is just web searches. But in my mind, as I remember it from my experience, at least, we do get this quick little pop, which I think we saw, and then we see some slow chop to the downside, and then we rally. And that's the Santa Claus rally, right? To me, technically, the Santa Claus rally is actually like the last 5 days of the year. I'm kind of out by then, if that makes sense. I don't want to wait that long. I'm not out, but most of my risk is off the table. But this week, what I would say is absolutely be hedged. We have no idea what's going to come in the back half of the week. It will be a fracking roller coaster. That's all I'll say for sure. VIX is super low. I don't think this is the best situation for condors or anything like that. But here's the week, right? In a nutshell. Today, very slow, really minimal. Tomorrow, consumer confidence, probably the only thing that's going to do anything. And then here it is, right? Wednesday, we get Powell. We also get GDP on Wednesday. This is going to be a big deal, right? Thursday, PCE and manufacturing index. And then Friday, NFP or non-farm payrolls typically determines the direction for the entire following month. So we want to be super conscious of how the market reacts, not necessarily on Friday itself, but Monday, Tuesday of the following week, right? How does the market really digest it? So nothing really here. This is that 10 a.m. Bullard speech, so probably about 30 minutes, give or take. Housing price index for Tuesday. And again, really nothing much. Dallas Fed services revenue. That's kind of something, but Tuesday is going to be pretty soft. I expect some similar chop. And then we get into Wednesday. So Wednesday, these times, by the way, are West Coast. I'm on Pacific Standard Time. So on the West Coast, 11:30, East Coast, that's what, 2:30 p.m. That's when we get, Powell's speech. That's when shenanigans can go wild. Also in the morning, we get quarter over quarter GDP growth rate estimates, right? So check this out. This is what's super weird right now. GDP growth rate for Q2, second estimate, we get third also, but the last estimate was negative 0.6. Here's the consensus. And what moves markets, you guys, is not how far away we are from the previous, it's how far we are away from the consensus. So what's important to note with this number, we get 2.7% positive Q2 GDP estimate right now. That's what's currently priced into the market. So here's the risk in my mind, and it's Wednesday morning before the speech, is if this number comes in negative, we might see a flusher. We could see a little bit of flusher. It'll probably be bought right back up by Powell coming in, saying whatever he needs to say. And then at 12 o'clock Pacific, 3 o'clock Eastern, we get something called the Beige Book, which is actually really interesting. So the Beige Book is when all the Fed governors actually turn in their reports for the next FOMC meeting, and they kind of report on each of their little communities or sectors, let's say. And the analysts go crazy over this one. So there could be all kinds of craziness in that report. We are going to get this GDP estimate early morning. We're going to have a market reaction, and then we're going to have a second reaction in the afternoon that may or may not reverse it, may or may not, continue the whole thing. So all I can say here is be hedged if you have a long portfolio of equities. And if you're intraday trading, be quick, in and out quickly. Thursday, this is PCE. So one of the Fed's main gauges for the PCE for inflation is PCE, right? Our spending. What does PCE stand for again? Oh my goodness. Holy, I gotta know this. I'm having a space cadet moment here, but I do want to say PCE this is Thursday, right? So Thursday, and on my calendar, it doesn't even highlight it as that important, but I'm telling you it is right now. PCE month over month consumption expenditures. So remember, what controls inflation is the velocity. I call velocity of money, right? How much are we spending back and forth, right? And this is the main indicator of that. So this is going to come out. We're way up here right now. If this comes down, which it's really, we're going to get it for October. And then, November, December will probably look higher because we have Black Friday and we know that we're spending more. It's kind of backwards looking number. The consensus is 0.3, which is significantly lower than 0.5. If this number comes in on Thursday at like a 0.1, whatever happens, earlier Wednesday, whatever dips that we have, if this number comes in at 0.1, we could see a serious rally too. So this is what I'm saying. We might have a little flush on Wednesday, and then we might get this weird number. My gut is saying that we may come in a little low, which would be good for the market on this number right here. But this is going to be, for me, the biggest actual number of the week, and that's on Thursday morning pre-market, 6:30 a.m. Pacific, 9:30 a.m. Eastern. So keep an eye on this, right? 0.3, 0.3%. That's what the current market is pricing in right now. So that we should be rallying based on that, or at least there's a battle going on between the bulls and the bears for sure. All right, moving on. Yeah. Total vehicle sales, not really anything. And then Friday non-farm payroll. So inside the non-farm payroll number that we get on Friday, again, it's one of the most important numbers of the month, if not the most important to me. There's all kinds of these little numbers, right? You get participation rate, average hourly earnings for the month, for the year, government payrolls, private payrolls, all that kind of stuff. Really, this one right here, average hourly earnings, to me, that's going to be one of the more important ones. That's the sticky number. So when the market's looking at like what's going on, in terms of companies' costs, right? The sticky number is the earnings, right? Like they're not going to give raises and then be like, oh, can I have that back later? No. So this is like an increased cost of doing business that definitely sticks around. So that said, I think that's it for economic data. Let's go ahead and hop into the charts. Before that, I'm going to do one thing really quick. If you guys don't do this typically, I just go into like sectorspider.com and you can see, hey, what's going on in the market. So the last 5 days, I want to see where's the strength in the sectors, right? So staples for sure. Materials, okay. Interesting, utilities. So I went into the utilities and was like, okay, over the last 5 days, what's actually been moving the most? And we see like American Power, tradable stuff. There was only a couple. I think it was like Duke and Dominion Energy. I don't see Dominion on here. Was I thinking Dominion Energy for something else? Is this here? EQT, look at that. EQT on the energy side, that's nat gas. I think nat gas is probably okay. Today everything looks down. All right. So heat map, we can take a look at that. 1 day heat map, I'm not really too concerned about. 5-day heat map. Here we go. So the strongest sectors are going to be what? Financials, staples, materials. I think might be a little extended. Materials and utilities are the strongest ones over the last 5 days or the month. Holy camole, materials 11%, utilities, industrials. So to me, I'm looking. This is what I'm thinking. Maybe short industrials, long tech. Industrials are up 11%. Materials are up 12%. Utilities up 9%. There's some catch up going on to be had in like industrials or staples and things like that. I had a chart here. that was ready to roll too. Yeah, so I think like if I just went here's the SPY, right? I think it was like look at this utilities 5 days. Utilities coming up. What's really beating? Definitely not financials. Industrials coming back down. I think it was healthcare. Yeah, so healthcare looks a lot stronger. And staples discretionary. So discretionary much higher. This is that small retail kind of sector. Ties in with the Black Friday kind of idea. Oh, my NEM. Pfizer doing good. Actually, Pfizer was one of my first ones, but let's take a look at the indices overall. Actually, Jesse, you do good on this intraday. Do you want to hit us with some intraday levels and then on SPY maybe, and then I'll take a look at the swing stuff?
On SPY specifically, not ES.
Yeah, you could do ES. Either way.
So ES for the day, I have 4018.
You want it? You can share if you want, or
yeah.
I can do this.
Share screen.
Okay, Jesse, just a sec. Boom. There he is. All right.
Yeah. So intraday. Let me pull this back a little bit. Choose this.
Let me see if I can move this. That might be a little bit better.
So I have 4018. That is pre-market high, and then today's high as well. We're looking really to either stay under. Oops, didn't mean to click that. Stay under 39.93 is really the spot. When I send alerts and such, I hold through wicks. So stuff like these little tiny wicks below, I'm not too worried about. I'm really worried about how it holds or reacts around this level. So 39.93, and then obviously 39.90. Like we've said early on in this little weekly checklist, we're always looking for Wednesday for FOMC. We're always looking forward to the next event. At least that's how it seems lately.
Yeah.
So we're just making those levels right now that we're gonna be reacting to on Wednesday. So 4018, and then obviously you can go through and mark out the highs. So 4050, and then all the psychological levels. So every 25 points is generally a psychological level. So 40, 25, 40, 50, and 4,000. 4,000 is a huge one.
Yeah.
Same thing with SPY. So if I pull it up to SPY, all these wicks above, I don't really care about. So 402.50 on SPY is pretty much what I'm looking at. And if I look over to the left,
I'm gonna take over the charts just because it's a little hard to see yours. So 4,002, right? I see it right there. Is that what you're saying?
402.50 on SPY.
Yep. So 402.50 right there. Okay. Gotcha. That was like post market kind of like fail level over the weekend. And top here, kind of fair value gap here. I like that for sure. We have a clean gap that's on watch too. What's your low end level for the day? Was it the same?
On ES, it is 39.90.
So
39.90.
I just want to point out, like, where does he get this from? It's a big deal, right? So 3990. And if you're trying to learn how to chart on your end, this is what we're looking at. And I think I'm on a 15-minute, but what day is this? This is Tuesday of last week. Do we get any info? Anything happened last Tuesday? I'd have to pull it up. But there's a big old candle right here, right near the morning session. And you can see this was like a clear level that we broke out above, and there was a massive amount of buying pressure. So right here, that's the level that we want to see defended. And I believe we literally just defended that exact level. So as long as this level holds, I think you could be fairly bullish, right? I had the exact same thing on SPY. It's right here, right? So 398, give or take, for this week. The top of this last Friday opening range. And right here, this is Tuesday. This is that level. We broke that Friday high, came back down, tested, right on top of it, and that's where they stepped in, right? And so what literally just happened, we hit that exact same level. They stepped in one more time. So that's what I can see. If you're trying to read charts for the first time, you kind of want to read this story. And as long as we stay above that short term, we could be okay. If we do fail that level, I just turned on some volume profile stuff. Jesse will probably have something similar. But I'd be looking at that 395 to act as the next level of support. But that would be the tradable range below 39.98 on SPY down to 395 if we do break it, but not if we're trading above 398. Is that something similar as you have here, Jesse?
Yep, exactly. 395 is my next level.
Yep. So 39.50. Oh, this is not. That is not the right ES. So we see, I'm just going to change this to a 30-minute chart. It's just a little bit easier for me to see. And so this is volume profile, right? Somebody was asking me earlier, how do you trade volume profile? Typically, you trade it like peak to peak. So we had this little peak right around 40.30 right here. And then the real, what they call point of control is right here, 39.59. What you won't find is kind of like what we'll call order blocks. And that's where some of the special sauce comes in when you're zooming in the candles to see, hey, on this specific day, at this specific time, at this very specific level, this is where they stepped in, right? And that's where you'll get some of that like 39.90. So bullish above 39.90 for sure. Okay, slightly bearish below down to 39.50, right? Which is this point of control here. And I mean, at most 39. All bets are off below that though. All bets are off below 39. I think it was like same level on SPY I had last week. As long as we're above this guy, which is like, this is the hard line of the sand to me, 388 on SPY, I can still be slightly bearish or at least chop to the upside. Sorry for all these lines too. Let me get this a little cleaner. But for the week, so what's important here is this was the CPI number, right? And so on that day, we moved almost the length of like this orange box is an average week. If you guys are, been around for a while, you guys know that's how I do it. And man, oh man, did that, like, this is what happens when we have a big old move like that. We spent the next 1, 2, 3, 4, 5. What is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days inside the length of like basically half the size, trading size of an average day. So like these are super small little levels. This is about half the average move of a day in SPY for almost 2 weeks after that. So we're still technically in this consolidation. So this is what I mean, choppy, right? So it's going to be choppy, I think, for the next till Wednesday, really. And you just want to play these very small ranges until then, because anything can happen. Everybody's looking at this 200-day moving average. But again, as long as we stay above that 39.90 or 39, what is this on SPY? 398 on SPY, then an average week's range would technically take us up to 410, give or take. And we do have a fair value gap target, one target at 412. So that would be within range. If something crazy happens and we get like good news after good news after good news, that would be an average week's range. If we do get to this 417, target acquired, see you later, trade is over for me, at least.
Right.
And then to the downside, it's maxed to that 385 level, which honestly, if we do break this, you're just going to go one level at a time, 390 or 39.98 to 395. You got some support right in between that 392 and 390. So I'd be very wary of trying to play anything inside of this range right here. That's going to be choppy for sure. You can see a lot of bounces going on. And then down to that, this is that 389 is kind of like my hard line in the sand where I would probably assume that we see a bounce. But if we do flush, it could be something like looks like short, comes up, bounce up, and then trade like that. I like that. Otherwise, if I see a rejection down here, I actually might take a longer shot. That's more of a swing, something like that. But we're a long ways away from that. Until then, short puts are probably okay, but quick and short trades. That's what I'm looking at. I'm going to take a look at the VIX really quick. So the VIX, we're at 21, right? And I believe the average range really on the VIX is like 15, give or take, right? Like somewhere around 15, I think that where we actually could get to. If we get there around 15, sub 20, I might be looking to put some hedges on one more time just in case, because your value is going to be pretty low, where the pricing is going to be pretty discounted, at least relative to where it had been. And the interim, this is kind of like your Goldilocks scenario for some debit spreads. As long as the VIX though is declining, you can do like some iron condors, things like that. I think we're coming near the end of that. This is what I mean, declining. As long as it's in a downtrend, would be okay. But keep that on watch for sure. Let's see. So diamonds versus Qs. So this is where I was. So diamonds technically hit this little bit of we had a fair value gap here. And I was watching this level that we just opened at today, 342. So this is where I was kind of thinking, like, we're real close. I think if the Dow were to turn around, see where the Dow is compared to like the S&P, we're way above that 200-day moving average. And I look at, that's that red line here. I look at something like the Qs, which we know have been beaten up to no end. I don't even know where the 200-day is way up here at 305. So something like this, the Qs were more on that kind of same value area, 285, give or take. As long as we're above 285, I think this is another setup that we could chop to the upside and target at least the top of this old broadening range. I might move this just a little bit. Something like that. And if I just take the two most recent tops, yeah, that takes us right there. That would be just about 300 on the Qs. Man, I got a lot of lines. I got to go through and delete some of these. My charts get like so overloaded with all these lines as we go. But yeah, basing here, happy to be long. I like that higher low after breaking structure. So high, low, higher high. Right now it's a higher low. So it's still bullish regardless of what's going on, at least from a price action perspective. This is interesting here. So this light blue line you can't see, I have the 20-day, the 50-day, and the 200-week all kind of converging together just late last week. And this piece right here is where you do want to take a look at taking some long volatility type trades. When you have all these moving averages kind of converging together and they start to separate, the moment that they start to separate, which is what's happening right now. So the 20-day just crossed over the 50-day on the Qs that are both about to be above the 200-week, which is this purple line. That's a sign of momentum is about to explode. Volatility is very inexpensive at the moment because you can see, what is this, 2 weeks? We've gone just straight sideways. We're about to make a move to me on this guy. And that one's the most kind of like beat up. I don't have that set up on SPY, right? That setup on SPY was long gone. And I don't have that set up on the Qs. So to me, I mean, not the Qs, the diamonds. Diamonds are more, we have a lot more. That already happened. See, so that same kind of situation happened on the diamonds somewhere around 306. And here we are at 340. The setup is currently happening on the Qs. I'm just going to check IWM real quick. IWM, not so much, right? Because it's already kind of like popped and expanded. So this looks sideways also right now. I think that was a good run to 185 on mid caps, though. Generally speaking, it could continue on. It looks like it's going to be fine. High end for the week on IWM would be 195 to that fair value gap, just rejecting its 200-day moving average. So that is somewhat important. 200-day moving average on IWM is at 185. We get a higher low here. Could be a good level. This guy is below that consolidation point. So might keep an eye on. However, IWM moves might be a leading indicator for the rest, but this is where I'm thinking. I'm thinking long Qs this week, short diamonds. If I were to put a pairs trade on, and last one before I get into actual stocks, volume profile. What? Oh, Melon Man. That's just actually the volume profile is just whatever stock in TradingView. So, well, you have to have their premium plan, which, by the way, you still have 60% off. Super limited time. Grab it while you can, while it's there. So the Dixie. So last week I had this 106 level plus 107, give or take, up in here for resistance. This week, we just hit what I had as my fair value gap on the Dixie. If we're peak inflation, I'm still thinking this is nothing but a lower high right now. So as long as we're below, I guess 106.50 on the Dixie, it's lining up to be continually bullish, right? And right here, right about now, at this 106.35 level, that was that fair value gap. We call it fair value gap, where basically price didn't have time to. It was big movement, kind of came back up, full retracement essentially, and now we see where we go, right? Which will likely, typically, be back down to its 200-day moving average. So we just tested right here at 105.35, and that was that bounce, just clean right off that 200-day moving average. So looks like we're heading back down towards it, which is bullish for assets or like equities, even gold. Speaking of, gold is chopping. Gold kind of getting that expansion. I still like it, man. I still like gold. Little rejection. Higher high. If I wanted to see a higher low, where would it be? And it would be right around here. Well, I like this level on gold. 17.37.10. That would be my line in the sand where I would want to take another shot on GLD for sure. Until then, I'll just give it some time to breathe. Crude, again, up to 79. That would be like that kind of fair value gap. Be looking for some trims. All right, let's move on. What's diamonds? So diamonds are just short form DIA, US 30 if you're trading Forex, or the Dow Industrials. We just call it diamonds. I don't know. Maybe it's an old term. What do you call this, Jesse?
Yeah, diamonds.
Yep. There it is. All right, cool. So I'm going to take a look at some other stocks really quick, and then we will head out. We got about 10 minutes left. Anything on like top of mind for you guys? Or Jesse, you want to pop one out?
Yeah,
you have a multi time frame. Like if you want to zoom into like one screen so you can see it a little bit better.
Yeah.
I can, if you have one that we want to take a look at. There you go. What do we got?
So I just hopped into some Amazon for their. I didn't feel comfortable going December 16th. There's only, let me see. There's only 3 weeks of, I mean, I guess it's enough time, but 3 weeks
December
of time.
monthlies.
Yeah.
Yeah.
So I went out to January and got the 100, and I think there was 100 110 calls, and same thing for Disney.
110 call. Look at that.
Mhm.
So the 100 calls, 4,000 volume, 3,900 open interest. You went 110.
Let me see. I just alerted them.
Yeah, 110, 1,600 volume, and 4,300 open interest.
Yeah, both were 100 110s for about a 1 to 4 risk reward. So, or 1 to 3. So I'll take it. Disney on the daily, sitting in this the daily golden zone. So Fibonacci high to low, and then also 212 up. So a couple confluences there on Amazon. And then also, I mean, we're after that Bullard speech. Or I don't know. My thing says he already talked at 12, but I also see some that say he talked at 1, so we'll see, I guess. But um, looks like it's bouncing, maybe making a higher low here on Amazon. Disney, something similar. I was in Disney until Wednesday of last week, and then
Yeah.
just got a 212 up on a 15-minute.
What
And
was the
then,
Disney news? Oh, it was the movie theater results.
mhm.
They had some pretty crap theater results. Dude, you know what? I really like this level on Disney, regardless of your fibs. But
Oh, yeah. I mean, it just did hit the 50, but um,
here,
let me,
I'm gonna let me see if I can show it. It's a little different view. So Disney, forgive the lines. So his fibs you're taking from this Thursday low, give or take. Swing
yep.
low here, 90, swing high, 101, 50%, right on the money. But from that order block perspective, check this out. So if this is a high, low, broken structure, higher high, where would your higher low be? Exactly right there. I mean, that's,
Yep.
oops, push the wrong button. Right here, right? That, as long as this holds, and this is how you set up like super low risk, high reward, your stop is just obviously right here, 94. So it's $2, not even $2. It's, what is that? $1.65 risk. And you're trading really. Yeah, I like this setup, dude. Yeah, you're trading that 107,
Mm-hmm.
give or
Yeah,
take, and this
I
fair
like
value
it.
gap right back into here. Right? We say fair value gap. It's like when you have this big candle and you look right to the left and you see, okay, this is where we might have got that fair value gap might have been filled. There's definitely one at 103 right here. Was that filled? Well, we shall see. If it was going to bounce, this is a good level to take a shot. No doubt. Yeah, I like that risk reward. Good find, dude. It looks like this.
Yep. I looked at Shopify as well, but looks like I missed that train last week.
Yeah,
Perfect.
you've been
Perfect.
watching
One.
Shopify for a while. Did we take
Yeah.
a look at Netflix? Anybody look at Netflix? Netflix. I got no trigger really. 277 below 277, easy short to 260, above 292, long to 305. But you're in the middle right now. What were your levels on Amazon? I had something similar. So Amazon, it was very similar. Like, check this out on earnings this day. When they had that earnings, where did they really step in post market? Right at that 92, right? And you saw it come back down, came back below, tag 92, 92, broke down at 92, hit 92, and then boom, with strength straight through that 92, filled it, came all the way back, bounced, and then this morning in pre, this is why, right? Bounced right up off of that 92. So old support or old resistance becoming new support. That's what we're looking at. I don't know if you had a fib value or anything like this on that. Well, that would be for the short. You want to see it. You really want to see it hold above this 95. But again, really good risk reward. Up to that, yeah, 104. How's Google?
Google is ugly today. Same thing as Microsoft.
So Google's got a similar thing. So I got a bunch of moving averages kind of converging. It's not ready yet. But man, as long as this 95 level is holding, I can see the chop to the upside. Oh no, we might get a flush to 90 is what I'm looking at, like right around here.
Mm-hmm.
Then I'd be picking up. I'd probably be picking up long equity. If I get a shot at 90, 50, I'll pick up equity for sure, with a tight stop around like 85. This one already hit 87. Man. But yeah, this is a setup that's forming. It's not quite ready. Apple had another one, so I think kind of consolidation here. Yeah, Apple's kind of just in range. You could trade. It's below. Apple right now looks like it's firing to the short side. They had some news too. It's got a lot of China stuff. 136 to the downside, give or take. That actually is triggering now, right now. So yeah, this is what I'm. So this is a 15. Here's this clear support right now. I'm gonna make a fully horizontal line just so I can see. So we're battling at this 144.79, which was this level right here. And I think this is like the equivalent of that. No, that would be this. So 142 would be the next level to the downside. In this box, you have supply. All right in here. That's some pretty major supply. So short term, yeah, you got some 140s. 142s are about $100 right now. It looks like it wants it, but at 1, 2, 3, 4, man, all these bounces. If I'm going to take this short, I need to see it break through first, and then I'll take it short on a retest. So wait for this break, 144.78. Wait for it, and then watch for a second retest, and then enter on a retest, not on the break. If you get a break with that much supply, it looks like it could just shoot right up in your face. To me. Yeah, they're stepping in 1, 2, 3 a bunch of times, but eventually they might give up, and you'll see. Otherwise, wait for a bounce up. There you go. Up to 146. If it bounces like that, 146, and then you get that, I could take this shot here at 146. Who knows? For right now, honestly, this looks like it could pop to the upside. If it doesn't break a level, it has to go back up to get more sellers so that it can go back down. So that's the logic. Oh, Disney, Intel, Microsoft. I'll look at brands. So Scott's got Ford. We'll take a look at that really quick, and then you guys got enough out there. So Ford just rejecting its 200-day right now. I like Ford. Not sure that I like Ford right at the moment. I do like, what's funny is if you look at Ford and GM, those stocks compared to Tesla, I think I was on TV. Like they're so much better than Tesla right now doing its own thing. We get vehicle sales this month or this week. Forget where it was. It was early in the week, right? So vehicle sales are Thursday. So I might look at this for a Thursday trade. If that vehicle sales number comes in good, I think that's good. Supply's been constrained so much on Ford and GM, things like that. We do have some converging situations. This looks like a little consolidation right now. You got a fair value gap. We have a gap up to 14 in the interim, which is right here. Actual gap that would likely be filled. So, and I'm seeing this as a higher low right now here. So I'm looking at this order block, and this is Thursday the 17th, where it was support or was resistance that flipped. Ooh. So watch this level, 1375. You're on thin ice. It's what Ford is right now. Thin ice for now, and you do not want to get back into this trading range underneath 1350. That's an ugly place. Steer clear of longs here. Must hold above this level. At worst, 1365. But I'd rather see it bounce up. I just got an alert on Dixie. What just happened? Oh, we're going up. Oh, fair value gap. Cool. That's fine. All right. A couple more. We did Disney, right? Disney, Intel. Yep. I know we did Apple. Yeah, we did Disney. INTC, that's your semis. Oh God. So Intel not so hot, I'll be honest. If I'm just gonna look at this kind of like trend line, she broke on this recent press higher, and then retested up here. So high, third lower high, low, lower low, third lower low. This looks like it's going down, and we do have this fair value gap at 27.88. So if we can see a little bounce, probably around here, and a retrace, then fail. I like that. So I'm just going to use a fixed range profile. So just in this range, I'm looking at this consolidation. Yeah. This consolidation would give you this kind of support right around 28.44. So if you're short now, I'd be looking at trim at 28.44 and then possibly re-enter somewhere on a retest up here. 28.85, give or take. Unless it just goes. Intel's one of those, just has a tendency to keep going. I did BA this morning, by the way. So Boeing was like a nice little double top. This was my setup. So little double top here. 1, 2, 3. Could not get up, so it has to come down. I'm still sitting this. I'm not even worried about it, or I'm not even thinking about it right now. 173 was a pretty key level. So we're getting, that's a quarterly high. So if we get back in this quarterly range, last quarter's range is from 174 down to 121. I'm not trading for 121. I think, we could trade probably for that 200-day moving average, but it starts at that 200-week. So there's this little 165, 170 level right now. So right now, this is where I'm thinking short industrials. In the interim, on this level that we're about to crack below is a pretty key level. So key level, double top here, key level high of August 16th that we're just about to get right back below. You want to be super cautious of a higher low. And if we do get a higher low, that would not happen until somewhere around 170, 250, which is why that's that next target on the short right there. So if it bounces around here, cool, it might be continuing to go up. But next trade would come like this. Push down, retest, fail. This would take you to probably about 160 or maybe just slightly below. If it breaks below 170 and attempts to come back up and fails. Oh, you guys. All right. We're running on time. So Microsoft, we did gold already, so you probably want to pull back, rewind, emit. It's in there. Microsoft, similar, a little double top. Here's what I like on Microsoft. You got the 20 and the 50-day sitting both around 236, which is the bottom of that consolidation. If we see a higher low on Microsoft, it's going to come in right about now, nearing around 240. So if you're short on this double top, good job. That was a fair value gap fill earlier, chopping, right? But if we bounce anywhere in here, be very cautious of a higher low. In the interim, yeah, I'm looking, if it does flush, let's say if it gets below 240, I'd be looking at that 232 level right here. Yeah, these 1, 2 kind of defenses, a breakdown here, resistance, press up. So right around this 232, man, that is massive supply. And technically, you have a fair value gap down to 225. It's right here. Fair value gap, just remember, just big fat candle, and right to the left, what's the top of the, or the bottom of the candle right before it? It's right here, 2610. Sync. Cool. That's it for now. Please look at Linkman. Please look at SPY one more time. What are we looking at, SPY? What's happening? That SPY's good, man. Where was my? So here, okay, broke down. Again, if you want to take short, I wouldn't be entering just yet. I would be looking for this retest. And see how I'm like zooming in. So I was on a 30, right? And then I went to like a 15 and a 6. Right now I'm looking at this kind of like double bottom right there on SPY. So I wouldn't take SPY short here. If it fails, more realistically 398.41, somewhere in there, right? Remember, big candle, fair value gap. Look to the left. What's the bottom of it? It'd be 398.68, and maybe 398.52 on SPY, where this is your new kind of like, is this supply or demand? God damn it. Supply, right? Overhead resistance, all of this up here. That was that pre-market low. So we'll see. I mean, obviously, if it breaks this low, yeah, we're back in. And then again, remember that target 395. But that's how the trade kind of like develops. Yeah, where this big old kind of peak is right here. Don't need to catch it like exactly on the exact right moment. What you really want to wait is for momentum to show up. And these this is a 1 minute, little tiny candles. Careful. Let it breathe for a second and see how it goes. Cool. All right, guys. That is it for me. Appreciate you, Jesse, for coming in.
Oh, yeah. Anytime.
Yeah. And that's a wrap. Adios, guys. See you next week.
Yes.